Hello and welcome back everybody to another one of our videos. Today we're going to speak about a very popular and interesting indicator for you to use. For those who don't know me, my name is Abid. I'm one of the VIP accounts managers here at the company. Before we get into it, guys, if you do like our content, if you do like our videos and want to see more stuff, just a simple reminder, you can like and subscribe to our channel. You can ring the notification bell for any upcoming content that we're going to release. And of course, if you have any ideas, if you want to see anything more in the future, leave them in the comment box down below. So without further ado, let's get into it. Today, we are going to talk about the RSI indicator. What is it? How does it work? And how to use it. Okay, so first of all, the RSI indicator. What is the RSI? This is how it looks like. You see the green line, the purple line, the red line. First of all, it identifies potential upcoming changes in the overall trend directions. So it can tell you if the trend is going to change or if it's going to continue potentially. It identifies overbought and oversold. I'll explain that to you in a bit. Momentum-based indicator. Momentum means like it reads the strength of the movement of the price action. If it's going, let's say, in an uptrend, if it's strong and it's going to continue in an uptrend, or if it's a strong downtrend, or if it's weak, this is what they mean by the momentum. If the strength of it is going to continue in the same trend, or if it's going to reverse. And finally, it's a leading indicator. It means it's one of the indicators that will help you make a prediction towards the price movement, for you to find, your entry points and exit points. How does it work? The RSI measures the asset momentum. As I mentioned, it measures the strength of the trend, how it's moving. It divides the average gains by the average losses for a given time period, the relative strength. The RSI line ranges from 0 to 100. If you remember in the previous slide, there was a green line, there was a red line, and there was a purple line in the middle. So the green line basically is the overbought level, the red line is the oversold level, and the purple line in the middle is the RSI, is the relative strength line. When the RSI line passes over the 70, it is considered overbought. So naturally, these settings by default of the RSI, you've got the overbought level is set on a 70, and the oversold level is set on a 30. And the RSI line, it ranges between 0 to 100. So it can cross the oversold or it can cross the overbought. Basically, when the RSI line, the purple line, passes over the 70, it is considered overbought on this, certain time period. You can consider, for example, like, okay, this asset at this time frame is considered to be bought too much, for example. When the RSI line passes under 30, it is considered oversold. Again, opposite meaning, when the RSI line goes below the 30, the oversold, you can interpret it as if the market is telling you, or the asset, the price itself is telling you, it is considered right now on an oversold level. It's been sold too much. And traders may use it to find good entry and exit points. How to use the RSI? A buy trade may be placed when the RSI is oversold under the 30 line and crosses back over the line. This is what I mentioned earlier. So we've got the RSI here. The green line is the overbought, the red line is the oversold, and the purple line is the RSI line. As we can see here at this point, the RSI line, it crossed from below the 30 and it went up. So it gave you an indication that, okay, the price at this time frame, it was considered to be oversold, and now it's reversing. In other words, a sell trade may be placed when the RSI is overbought over the 70 line and crosses back under the line. Same thing as before, but opposite. The line, as you can see, the RSI line went above the overbought, above the 70 line. It told us, okay, the price is considered relatively high according to this time frame that we're trading in right now, and then it crossed back down to it. So this indicated for us a reversal in the trend potentially. And another way to use the RSI is with convergence and divergence. Convergence happens when the price action and the RSI move in the same direction. Both of them are moving in the same direction. Divergence happens when the price action and the RSI move in opposing directions. And let me show you how. First of all, we've got the bullish convergence. The price action and the RSI both display higher highs. We can see here, we've got this is the first high, and this is we've got the second high. You see the high on the price action, it is becoming higher. On the RSI, we can look at the same thing. We've got the first high point here. It already crossed above the overbought, the 70 line. And then we can see the second high here. See, both RSI and price action are moving together in the same direction. Each one creates a new high, the other one follows with a newer high. Bullish momentum is maintained. So it means in this case, when we talk about bullish convergence, that the momentum of the price action is going to continue in the same direction, which is bullish, as we can see here. And then we've got bullish divergence. Bullish divergence is like this. The asset value is showing a lower low. As we can see here, this was the first low, and then the second low became lower than the first low. And then we've got the RSI is showing a higher low. This is the first low, and the second low was high. So if you look at them just like this, as we showed here, they are going in opposite direction. The price action is going lower, but the RSI is going higher. This one here, bearish momentum, is slowing down. So it is indicating for us a reversal in the trend. But because we see that the price action itself is becoming lower, but the RSI that is reading the momentum of the price action is telling you that the momentum is slowing down. The bearish trend is weakening. And this is why we can interpret it as a potential reversal of the trend. How we can know it more? We can draw a line linking the nearest highs to identify the potential reversal moment, and we draw it like this. You see here, we draw it on the first point, the high, and the second high, and we connected it all the way down there. And then the moment the candlestick, the price action crossed above this line, we can interpret it as, okay, so the downtrend, the bearish trend, has reached its peak, it's weakened enough, and now it's broke the line and it's going to reverse and continue in an upward direction, as we can see here. Now, bearish convergence. Now, this is similar to previously, but opposite direction. The price action and the RSI both display lower lows. Okay, we can see here, this is the first low, and now we've got the second low, and the RSI is also moving with it. On each low, it's becoming lower. Bearish momentum is maintained. So when we see a convergent situation, it means that the trend is potentially going to continue in the same direction. When we see a divergent, it means the trend can potentially reverse, and let me show you in this one. So bearish divergence here, we've got the price action, the asset value is showing a higher high. As you can see here, this is the highest point, and then it created another high point. And at the same time, the RSI is showing a lower high. This is the first high on the first point. It became lower on the second point, while on the price action, it actually became higher. So it was in opposite directions. In this one, bullish momentum is slowing down, as I mentioned. So the bearish trend was weakening. So we ended up drawing the line to see if the trend is going to break and is going to reverse. We can draw a line linking the nearest lows to identify the potential reverse moment, as we can see here. The moment it broke the line, you can see that the price action, continued downwards. And now let's go quickly to the live part so we can show you. So here, I highlighted this part for you guys already. It happened quite recently, as you can see. So on this point here, we see on multiple occasions convergent and divergent happening together at the same time. So at this point here, I marked this with the yellow line here, and then this line here, and then I also marked it with the same color of the yellow line on the RSI. See, both of this first low is marked on the RSI below the 30, and then the second low is also below the 30, but even lower than the first low. A lot of lows. So as we can see, and even on the third one, I marked it here with the yellow, you can see this is giving us a bearish conversion that is going to continue within in the bearish trend. However, at the same time on this peak, it started giving us a signal of a bearish divergence. This one now I also marked it with a green on this peak, which was the lowest peak. And then we can see here on the second peak, on the price action, it was the lowest. But on the RSI, it became higher than the previous one. So this gave us the divergence signal that this bearish trend is weakening. So we end up drawing the line here, the trend line showing this, and we can see that the moment it crossed the line, it gave us the signal that, okay, the bearish trend has ended, and we could interpret it that now it is going to reverse. And as we can see here, it went upwards, so we could have entered the position right after this candlestick, which was our signal. We could have entered the position here, and then you see in general it just continued back, a slight pullback, and then in general continued going uptrend. And we can do the same thing over and over again. Like here, for example, the moment this ended, the moment the signal ended, we can even look more at the RSI. We can even draw another line here. Let's see if it's going to be clearly visible. We draw a line here. As you can see, it's also tilted. Let me highlight it more. It is also tilted. This low is lower than the previous low on this one and on this one. So it also, after the divergence, the bearish divergence was completed, it gave us a signal that this is now a bullish convergence. So this is how we can use the RSI in order to interpret trends, how to use it within the market, how to read it. This is basically it. It's a very interesting indicator, and it can be one of the most reliable. But remember, guys, let's go back to the presentation. Like all indicators, the RSI does not take market news and announcements into consideration. This is basically all on technical, on the price action movement. Okay. Experienced trader use the RSI in combination with other indicators that display volume, volatility, and trend. Okay. So basically, it is a very reliable indicator, but then again, it doesn't give you, it might not be able to give you the full job of itself on its own. So experienced traders tend to combine it with other indicators that read different aspects of the markets, of the price action movements, in order to have a better prediction. This is going to be it for today. Now, as we mentioned here, that experienced trader use it with other indicators. Just a simple reminder to like and subscribe. Okay. Support the channel and keep, ring the notification bell, because you should be looking forward for our next video, which we will be speaking about how to use the RSI and combine it with a different indicators. Okay, this is for today. I wish you all the best of luck, and I look forward to seeing you again on the new video. Take care and good luck, guys.